Wanted to turn your attention, folks, right back to the area of commodities. Alan Nuckman is with us, Chief Market Strategist, BullseyeOption.com. I know you're watching U.S. Steel, and this, as aluminum has been near highs, we have updates on the package from Washington, which seems to have stalled some, and U.S. Steel this morning is down about 2.7%. So with this kind of move, I know you have some trading strategies for us. Tell us more.
Well, I'm an old school commodities guy, number one, and I pay a lot of attention to the futures markets. Let's talk about the macro market first. If you look at the futures markets and you look at short-term interest rates, the Eurodollar futures, which track that, we're not seeing any rate hikes until December of 2022, and they're going to finish up with, at the end of December 23, with a total of 3 hikes that'll bring it up to 0.75%. So there's less concern in the marketplace anyways about rising rates than anywhere else. So looking at that and talking about commodities, U.S. Steel has had an epic run. U.S. Steel is up 275% from its 2020 low, but it's pulled back 15% and more in a month. So I'm looking at this as a value play. It's been trading between 20 and 30 for 6 months. So the 25 level is a level to lean on, and we're right there right now.
So when you look at this 25 level, because you said this great run 2020 low, but a recent pullback. So right around this 25 level, when we look at the 52-week high, that was $30. So you think it can get back to that $30 level?
Well, like I said, we're in a trading range, and I'm just a technician. So 20 to 30,
right.
Under that target's 40, and we were at 40 in U.S. Steel back in 2018. So this is a stock that's interesting because over the last 3 years, it's down 10% versus the Dow being up 30%. Now, U.S. Steel is no longer in the Dow, but you get my point. The strategy I'm looking at is my stock substitution strategy, where instead of buying the shares, I'm buying the in-the-money call. I'm buying the December 22 call. It's trading around 5 or so right now. It's deep in the money. It's 5 delta. It's got 3 months of time. And so that'll pay off very, very well from just even a modest move back up to that 30. That option will gain nicely.
So buying an in-the-money call, obviously pushing it out some time, right? I mean, There's nothing you would do more in the near term. It's more about sort of playing it along with the thoughts that you have on interest rates or the lack of moves in the interest rate in the near term, and then maybe something later next year, right? I mean, that's how to do it.
Yeah, the strategy here is my indicator, my smart money indicator that's looking at smart money flows is seeing some accumulation of this stock again. So that's a positive. Now, looking at the options chains, if you go out to December, the December option is only $50 more expensive than buying the November. So when in doubt, buy more time to be right. That's always the strategy when you're an options trader. So I have an in-the-money option. I'm looking for it to get deeper in the money. So it's about math and probability. So a combination of a good amount of time here, you've got 3 months of time, and having something being effectively long from 22 is a position that I like based upon this chart pattern and look to see how it holds around this 25 level in the next coming weeks.
Right. Alan, it's great to see you. Thank you for this. We appreciate it very much. Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Thank you, Alan. Coming up next, we're going to take a look at a pair of ETFs in renewable energy. What do investors need to know before jumping right into that space? Much more. Morning Trade Live still ahead right here on the TD Ameritrade Network.